Gold, a shield against the fragility of central bank trust. In today's financial landscape, where the credibility of central banks is increasingly under threat, gold has emerged as a vital safeguard. The period following the Federal Reserve's independence, particularly from 2020 to 2025, has seen significant political pressures that have tested the autonomy of these institutions. Notably, former US President Donald Trump's public criticisms and calls for interest rate reductions have not only stirred market volatility, but have also shaken investor confidence. This evolving scenario has transformed the investment environment, positioning gold as a strategic asset to counter both systemic and geopolitical uncertainties. The decline of central bank credibility, once regarded as a fundamental principle of modern monetary policy. The independence of central banks is now facing unprecedented challenges. The aggressive rhetoric from Trump, including his handwritten demands for rate cuts shared on social media, has significantly swayed market expectations. For instance, blockchain-based prediction markets have shown a surge in bets favoring more lenient monetary policies. Historical examples, such as President Nixon's interventions in the 1970s that contributed to rampant inflation, highlight the long-term repercussions of politicizing monetary policy. By 2025, the Federal Reserve's adjustments to its inflation-targeting framework, discussed at the Jackson Hole Symposium, illustrated a desperate effort to reconcile price stability with mounting political pressures. Furthermore, as global central banks increasingly diversify their reserves away from the US dollar, the dollar's supremacy, and consequently the credibility of the Fed, has been undermined. Gold's revival as a key asset. In this tumultuous environment, gold has flourished. By mid-2025, its price soared past $3,500 per ounce, fueled by persistent inflation, rising geopolitical tensions, and the perception that the Fed is vulnerable to political meddling. Central banks, especially in emerging markets, have ramped up their gold acquisitions, adding nearly 1,000 tons in 2025 alone. This trend signifies a fundamental shift in perspective. A remarkable 85% of central banks now recognize gold's performance during crises as a crucial element in managing their reserves, while 81% acknowledge its benefits for diversification. For individual investors, gold's allure lies in its dual capacity to act as a hedge against inflation and a protective measure against currency devaluation. Frameworks for strategic allocation. According to the 2025 Central Bank Gold Reserve Survey, 43% of institutions intend to boost their gold holdings in the coming year, underscoring its importance as a long-term store of value. For personal investors, a strategic allocation of 5% to 15% in gold can provide resilience against macroeconomic shocks. Historical data indicates that gold outperformed traditional safe havens such as US Treasuries during the period from 2020 to 2023, even amid moderate inflation. Additionally, threshold Garch models have validated gold's effectiveness as a diversifier, particularly when combined with equities and bonds. Practical insights for investors. 1. Rebalance your portfolio with gold. In light of the breakdown in traditional asset correlations, it is advisable for investors to allocate 5% to 15% of their portfolios to gold, taking advantage of its counter-cyclical characteristics. 2. Stay informed on policy signals. Keep an eye on expectations regarding Fed rate cuts and central bank gold purchases, as these can serve as leading indicators for gold's future performance. 3. Diversify beyond fiat currency. As central banks reduce their reliance on the dollar, consider investing in gold-backed ETFs or physical bullion to protect against potential currency fragmentation. Conclusion. In an era where the credibility of central banks is increasingly politicized, the strategic importance of gold cannot be overstated. Its historical resilience during times of crisis, coupled with its growing acceptance among institutions, positions it as an essential component of modern investment portfolios. As the independence of the Federal Reserve continues to face scrutiny, investors must adapt by incorporating gold into their asset allocation strategies, an approach that aligns with both historical trends and the current market dynamics. What are your thoughts on the role of gold in today's investment landscape? Do you believe it can truly serve as a reliable hedge against the uncertainties surrounding central bank credibility? Share your opinions in the comments.